You know, history has a funny way of echoing through time. What if I told you that a financial weapon, one that was forged nearly a century ago, might be getting aimed right at the US economy today? We're about to dig into a fascinating piece of history with a very modern twist, a story that could have huge consequences for the dollar in your pocket. So, let's get into it. Think about this for a second. What if, way back in 1934, the United States, maybe by accident, maybe not, unleashed an economic weapon that completely crushed another nation? And what if that very same nation, 90 years later, is now using the exact same playbook, but this time it's in reverse, and it's pointed right back at America? So this is really the whole story in a nutshell. Back in '34, a U.S. policy caused a massive flood of silver from east to west, and the results for China were devastating. But today, well, the tables have turned. China is now the one stockpiling silver. And that big question mark? That's what we're here to figure out. What happens next? To really understand what's going on today, we have to jump in a time machine and go all the way back to the 1930s. It's a wild story about how a single American law, something that was just supposed to help out silver miners during the Great Depression, ended up causing a catastrophe for a country halfway around the world. And you can see just how fast this all went down. In June of 1934, FDR signed the Silver Purchase Act. Now, the idea was noble enough: support American silver miners who were struggling. But to do it, the U.S. Treasury started buying up so much silver that the global price basically tripled overnight. And the unintended consequence? Well, it was a wrecking ball for China, which was the only major country at the time whose entire currency was still backed by physical silver. It hit their economy like a tidal wave. And this number? Wow, it just shows you the sheer scale of the crisis. In just 1 year, the amount of silver pouring out of China exploded by 18 times. You see, American banks in Shanghai figured out a simple game: buy silver cheap in China, then ship it to the US and sell it for 3 times the price. The country's money was literally being vacuumed out. You can just imagine the panic in the Chinese government. Their finance ministers sent these desperate messages to Washington, basically begging them to stop. He explained that their policy was causing catastrophic deflation. That means prices, wages, everything was collapsing, and it was tearing their whole economy apart. And the response he got back was, more or less, sorry, that's just our domestic policy, our hands are tied. And this is the part that really matters for the long term. China was forced off the silver standard, so they had to start printing paper money with nothing to back it. This led to one of the worst hyperinflations in history. It completely wiped out the savings of the middle class. In fact, the famous economist Milton Friedman later argued that this economic chaos was a major reason the existing government lost the civil war that followed. Okay, now let's fast forward 90 years. The lesson learned by the new power in China seems to be that currency is a weapon. And today, it really looks like they've taken that old playbook and completely flipped the script. Just look at the moves they're making. China isn't just the world's biggest silver user anymore. Their central bank has been on an incredible gold buying spree for 18 months in a row. They're now restricting silver from leaving the country, the exact opposite of 1934. And on top of that, they're working with their BRICS allies to build brand new ways to trade these metals without ever touching the US dollar. Now, this is all happening at a really critical time. For 5 years running, the world has used more silver than all the mines on Earth have been able to produce. We are in what's called a structural supply deficit, and it's getting tighter. And this chart shows you the problem perfectly. On one side, you've got demand hitting all-time highs, driven by everything from solar panels and electric cars to AI data centers. But on the other side, the supply from mines is basically flat. And as we all know, when demand is skyrocketing and supply can't keep up, prices really only have one way to go. You know, if you're finding this deep dive into this hidden chapter of economic history interesting, please take a quick second to like this, share it, and subscribe. It really helps us keep bringing you these explainers, and of course, you won't miss any of our future updates. But here's the thing. This strategy isn't just about cornering the market on one metal. It's one piece of a much, much bigger geopolitical puzzle. And the goal seems to be nothing less than reshaping the entire global financial order and challenging the long reign of the US dollar. And you can see that trend right here. Back in the year 2000, the US dollar made up over 70% of all the money held in reserves by central banks around the world. Today, that's dropped to about 58%. It's a slow, steady chipping away as countries look to other currencies and more, to physical gold. That's a shift that could have a real impact on the dollar's long-term value and our purchasing power. And it looks like there's a pretty clear 3-step plan they're following. Step 1.
Accumulate the physical metal. Stockpile gold and silver. Step 2. Build the pipes for a new financial system. They're actually testing something called Project M-Bridge, which lets countries trade directly with each other, no dollars needed. And that leads to step 3. Use this new system to bypass the dollar entirely.
And when you put the two sides next to each other, the contrast is, well, it's pretty stark. The U.S. has no strategic silver stockpile to speak of, and our gold reserves haven't been properly audited since the 1950s. Meanwhile, the BRICS nations are stockpiling metals like there's no tomorrow, they control a huge chunk of global gold production, and they're actively building those dollar-free platforms we just talked about.
So, let's bring this all full circle. By connecting the dots between what happened back in 1934 and what we're seeing today, we can get a much clearer picture of what tomorrow might look like for our economy and our money. This right here is the main takeaway. In 1934, the metal flowed from east to west, and it bankrupted China. Today, the precious metals are flowing from west to east. The old strategy of draining a nation's monetary metal is being mirrored by a new strategy of hoarding it. And the potential impact? Immense pressure on the U.S. dollar system, the very system our entire economy and our personal savings are built on.
And the forces behind this are incredibly strong. The U.S. government itself now calls silver a critical mineral. It's hard to get more new supply because most silver is just a byproduct of mining for other metals. That industrial demand we talked about is exploding. And maybe most telling of all, the price to get your hands on physical silver in Shanghai is now consistently higher than it is in London or New York. That's a huge signal that the physical metal is getting tight.
So we're left with this one powerful question. In a world where the financial ground is shifting beneath our feet and new powers are rising, is this humble, everyday industrial metal quietly becoming the ultimate form of economic leverage? As they say, history may not repeat itself exactly, but it sure does often rhyme. Thanks for joining me for this one.